Hello, my name's Ethan Wrenn. Make sure to check out my website, ethanwrenn.com. From there, you can find links to all my various socials. We're currently live on Twitch, YouTube, and the front page of my website. I'd really appreciate if you went over to my website, checked it out. Over there, I have a blog. From there, you can read articles pertaining to finance, ETFs, gaming, emulation, technology, all these different facets. Also, in the bottom right-hand corner of every page, you have access to my Discord. You can click here and see all the various channels. Click into them. See what there is, and again, you can do that all without an account, just by visiting the website. So the next video we're going to be looking into is from CNBC. Why the US dollar may be in danger. Let's find out.
Warning of the dollar's impending doom.
I don't want to be overly dramatic, but I think I will use the word doomed in the long term.
The US dollar is the most powerful currency that exists today. It's accepted and traded almost everywhere in the world and has shown strong.
If you know me, I'm very bearish on the US dollar, very bullish on assets, I also see foreign currencies such as JPY or the Israeli shekel or the pound being quite strong.
Resilience through numerous financial shocks and mounting fiscal debt.
The US dollar for the last couple of decades has been the preeminent global currency in virtually every dimension you can think of.
It allows us to have a great demand for our currency and for our bonds. So it often allows us to live a bit beyond our means, so we can borrow easily and at low interest rates in the world to finance economic growth.
But some experts worry that the dollar's dominance may be under threat.
I tend to think that nothing could ever dislodge the dollar from this preeminent status as the world's currency. That view is overblown and ultimately will be challenged.
So what poses a threat to the dollar's?
Think about it. Other countries out there like power and money as well. Other countries like money, they like power just the same way the US government was. If other world powers had the opportunity to make their currency a leading currency in the world, they would jump at that opportunity in a heartbeat.
Status as the world's reserve currency, and just how long can its dominance last? America's growing account deficit is one of the biggest threats to the dollar.
The US dollar ought to be under threat. After all, the US government has been running massive deficits for a long time, which shouldn't.
This kind of links into the debt ceiling videos that are also available on my YouTube channel. I'd highly recommend watching it out and regard to like the debt ceiling, for example. But when you think about a country, and if you think the outlook for a country's bad, whether it's because of their debt, whether it's because of their political policies, political risk from invasion from other countries, things of these natures, like that reflects in their currency. Like you could think of a country's currency as almost like its stock, right?
Principle be reflected in high inflation, which in turn should reduce the dollar's value and the dollar's role as an international currency.
This is most evident in America's current account deficit, which means the value of imported goods and services exceeds the value of exported goods and services.
The current account balance, as we call it, has been in deficit every single year since the early 1980s. In some years it's modest, in some years it's big, and right now it's big in the U.S.
During the fourth quarter of 2021, the U.S. current account deficit hit $217.9 billion, amounting to 3.6% of America's GDP. Experts like Stephen Roach believe that this growing deficit is directly related to a low national saving rate.
And when countries do not save, which is the case in the United States, we end up borrowing surplus saving from abroad to square the circle. We can do that because we have this, almighty dollar, the world's great reserve currency. And so we have been borrowing massive amounts of foreign savings from abroad, and it provides a relatively painless way of financing our current account deficit until something happens that changes the minds of foreign nations who want to lend us their surplus capital, their surplus saving. And, I think there's a risk of that down the road as our international balance of payments deficit continues to expand.
The US dollar has been the world's reserve currency since most countries abandoned the gold standard.
America went off the gold standard and wrote an ounce of gold split up into 20 pieces, each called $1.
That means a substantial amount is held by central banks and major financial institutions to use for international transactions. But its share has been steadily dropping. During the fourth quarter of 2020, dollar share in the global foreign exchange reserve dropped to its lowest share in over 20
This is a good chart to look at because it represents the demand for the US dollar on the global stage, right? Sure, you could think about tiny Forex traders doing trades here and there intraday, but it's these massive governments and these massive federal banks across the world that have reserves of these currencies who are constantly taking currencies out of circulation and then putting it back into circulation. That's really going to drive some of these price fluctuations. And as you can see, these reserves have been kind of dwindling as far as US dollar reserves being held by foreign banks, right? So foreign banks are starting to hold less and less of this, which is increasing more supply out in circulation.
5 years. The rise in alternative currencies may be to blame.
It has come down, partly because of the introduction of the euro. The euro has become held to a greater extent over the years.
Renminbi started playing a role as a reserve currency just a few years ago, and it accounts for a relatively modest share, less than 3% of global foreign exchange reserves, but it's been chipping away very modestly at the dollar's role. Plus, there are other reserve currencies, including the Japanese yen, the British pound sterling, but even some of the smaller reserve currencies, such as the Canadian dollar and the Australian dollar, that have all gained marginally in terms of their shares.
While the recent geopolitical crisis has caused investors to flock to the dollar, strengthening its position, whether that safety will last is another question.
The fact that we may have overlooked some alternatives, whether it's the euro, the renminbi, or, dare I say, cryptocurrencies, the case for a weaker dollar is one that I think we will then address again.
Why does the value of the dollar decrease and increase?
When the dollar softens, it usually isn't a cause for concern. In fact, it could even be beneficial for the US economy.
Sometimes
Let's note that everybody take out your notepads. What did she just say?
It usually isn't a cause for concern.
Dollar decrease and increase.
When the dollar softens, it usually isn't a cause for concern. In fact, it could even be beneficial for the US economy.
A weak dollar could be beneficial for the US economy.
Sometimes if the economy is faltering, having a weaker currency can provide a boost to those exports by making them more competitive in the global market.
So what she stated is when a US dollar is weakening, it makes US goods and services more competitive on a global stage. When a US dollar depreciates, the foreign currencies, let's say euros going up. That means it requires less euros to buy goods from the United States. Now, this could, in theory, potentially result in them buying more from the United States. So, for example, a multinational enterprise based in the United States, they typically get X amount of units purchased from a European company. This European company every year spends 1 million euros on this US company. Now, because of a depreciating US dollar, this euro represents more quantity of whatever good or service they are buying from that US company. And when that euro gets exchanged, to the US company, it gets exchanged into more US dollars than they would have received prior, which then on a financial statement always looks like that number is going up. So multinational enterprises do seek to benefit from a weakening US dollar, as depending on their agreements, it could also be the case that European company only wants X amount of units regardless of dollar value, or it could be the case that they want X amount of units based on a fixed dollar value. So that there's a couple different ways that can go, but more often than not, when looking at finance, companies or countries with a decreasing value in their currency tend to see higher demand for their goods and services, which then brings more foreign money into the United States, which then gets converted into US dollars, and it kind of self-balances itself to that extent. So you have that aspect to look at it. But again, when this money comes through, the increased demand for U.S. services from abroad, this then is shown in financial reports. And companies that have multinational enterprises who have like business operations all over the world tend to see their financial performances in the form of earnings, etc., balance sheets, all of that be exceptionally well in periods of a US dollar depreciating. So when your home currency is depreciating, your home multinational enterprises will do excellent on earnings. That's one reason driving it up. Also, a depreciating home currency requires more to buy assets. So that also in turn directly increases the value of US assets. So you have these two factors kind of at play when your home currency is depreciating that can stimulate your economy.
So a weaker dollar at times can certainly be a benefit. The flip side is too weak a dollar means that you tend to get high inflation, and that can be discouraging to foreign investment.
If the dollar becomes too weak, it has the potential to have a catastrophic impact on the American economy.
It would make imports a lot more expensive, and that would certainly drive up inflation. And if that came at a time when inflation was already rising, as is the case right now, that would certainly put a lot of pressure on the US economy. If foreign investors started dumping US government bonds and other types, that would certainly drive up interest rates, which would in turn would make and basically all the rates on borrowing by US consumers and companies much more expensive, which might substantially affect both consumption and investment and bring down economic growth.
In response, the equity and commodity market would most likely take a hit as well.
Most commodities are priced in dollars, and if the dollar were to go down, that would certainly have a significant impact on commodity prices around the world.
A severely weakened dollar would also mean bad news for economies around the world that have grown dependent on it.
It certainly would reduce the value of a lot of US dollar assets, and that could create a lot of havoc in the global economy.
I think she kind of has a misunderstanding here. When the value of the US dollar goes down, it requires more US dollars to buy X, whatever that is.
Anytime you have turmoil in US financial markets, that is going to spill over to the rest of the world. The same is going to be true of the US dollar, because after all, when the US dollar depreciates, it has to depreciate against the other currencies of the world. And
which means other currencies around the world seek to benefit from a depreciating US dollar. It's almost like they want the US dollar to go down so that their currency can look good. It's almost like they take turns, right? You know, there was a period for a time where the US dollar was doing quite well, and you know, you could say it's still high, right? You could say the value of the dollar is still high. And that would negatively impact all these other countries. You don't think these other countries want to be in a period where their currencies doing quite well, where they're able to get cheap imports? It's kind of this give and take, this yin and yang.
that would hurt those economies because many of them, including the Eurozone, China, Japan, they rely a great deal on exports for economic growth.
Most experts, however, argue that the US dollar is far from the end of its reign.
I think the chances of that happening in my lifetime are negligible. The world's reserve currency, which the US dollar is, usually has an independent central bank. It has a strong, usually military backing to provide that security, has deep and liquid bond market that foreign investors can invest in. When we've seen concerns about events in the global economy, whether it's the economy or geopolitical events, the dollar's gone up not down. It's seen as a safe haven.
What happens when there is financial turmoil, either in the US or around the world? Investors around the world are going to look for safety. And what is the only real place that you can go for safety in large amounts? The US financial markets. This is why I think a dollar collapse actually is quite unlikely, because the implications of a dollar collapse are that you would have a real search for safety, and the only really safe place to put lots of money remains the US.
While the pandemic did cause volatility in the price of the dollar, its value today hasn't seen much decline compared to prices before the pandemic.
The U.S. economy has done better than most other economies through the pandemic. It's recovered more quickly. Our interest rates are moving up faster than they are in other countries, which means you earn more by
Which is also not true. The European Union has basically been in lockstep with the whole interest rate increases, so our interest rates are not higher. When you look at things like interest rates, it really is a relative term, right? It's not a matter of what they are. It's a matter of what they are relative to countries around the world. And typically when the U.S. is increasing, so are foreign countries such as the European Union. And again, it becomes this null and void talking point.
putting your money in US dollars than you might say earn in Japanese yen or alternatives. The dollar continues to be quite strong. And then when we get these moments of flight to safety, as we've seen with the outbreak of the war in Ukraine, the dollars actually tended to go up as investors look to the most liquid and safest markets to put their money in.
Concerns over account deficit and the net savings rate could be overblown.
We've certainly seen our debt to GDP rise, but our cost of financing
The debt to GDP is rising.
debt has been quite low, so it hasn't been particularly onerous for the economy to service that debt.
Most importantly, while there may be alternatives to the dollar, there just isn't a realistic alternative for reserve currency.
When you think about what's required to have the world's reserve currency, it needs to be freely convertible. China's currency is not. They have capital controls. You need an independent central bank. You need large and liquid debt markets. Europe certainly is a large economy, but their debt markets are somewhat fragmented because it's a combination of different countries. And so you put that all together, and right now there's no kind of present currency alternative. I don't know what the future of crypto is, but
When it comes to currency valuations, these things fluctuate regularly. It's very natural. They're kind of trying to allude to this idea of just like one day the US dollar is there and one day it's gone. Like, that's okay. That's unrealistic. But when you look at these gradual changes in trend over time, you clearly see this depreciation in the dollar happening. And it happens quite often. There's these cycles. We've done videos about it here on this channel. I'd highly recommend going to watch some of those US dollar videos. But I feel like this video provided an okay understanding, at least arguments from both sides, you know. So
certainly nowhere close, I would say, in the evolution of that to even think about it, taking the place of the US dollar.
For now, the dollar's dominance will likely continue, but so will speculation surrounding its health.
The dollar is emblematic of strength in international finance, but it's also emblematic of the obligation that we have for running our economy in a way that is compatible with that enduring strength. And there's a lot of issues, some of which I've raised, that draw questions into that presumption that need to be looked at very seriously.
all right, so we're done with that video. CNBC, I mean, it was all right. Just give me one moment and we'll jump into our next video.